Hello there, we are continuing with our Binary Options Academy projects under the fairbinaryoptions.com website, and we are dealing today with nothing but interpreting a range. So trading a range, how to split a range in order to trade successfully binary options. Well, from the very moment that you are able to identify a range, you gotta think of the opportunities that binary options trading is offering, because we are discussing here at least basically three possible options. We are discussing here being a range, so range trading, we are discussing mostly one-touch options. Then we are discussing, of course, the boundary option, and the all important by now, my preferred way to trade binary options, the high-low option, of course. Now, first of all, we gotta identify a range, and it is very important to know where the range is forming and basically what the time frame is. I would like to offer a classical example. The example is on this 4 hour chart. Basically, we will interpret this area here, what to do, how to use the Fibonacci retracement for a range. Now, ranges or trading a range, you should know that look for a range on when? You should look for a range in the Asian sessions. Asian sessions are the ones that are most likely going to show a range, or we should look for a range in in non-farm payrolls week, NFP weeks, because in an NFP week the non-farm payroll is going to be released on a Friday, and on that or until that Friday, price will have the tendency to range. Depending on the currency pair, the range will be bigger or smaller, of course, but it will have the tendency to range and to explode higher or lower together with the non-farm payroll released on that Friday. Now let's try to see what are the first thing to consider when you're looking for a range. And first of all, you should start with a bias. I mean, how to find levels to trade a range. First of all, you look at the move prior to the range. If the move prior to the range, like it is here, it is a bullish one, then we want to see if at this very moment we want to see how to split this range in order to find out a continuation pattern. And we also want to see that the series of what does it a trend is being represented. A trend is being represented like this. You have a series of a higher high and then a higher low, a higher high and then a higher low. Now the same with the range. When you identify a range, let's assume that this is a range, we want to make sure that the market is not breaking the series of higher lows. So what I'm trying to say is that we have already a move here, a low from the downside, then we have a higher low. If market goes and breaks that higher low, then that is not a range anymore. At least not a range that we are interested to trade the way we should trade it, and we will learn that on the second part. It looks like a triangle so far, but we have specific steps to follow on this range, in the sense that we want to find the 50% range or the middle of the range for trading one-touch options and even boundaries. We want to look at the time frames that the market is, because every time it goes into the lower side, we are interested to trade high or low options, but with call options in this case, but with bigger expiration date. And we are looking, of course, on the period of time during a trading month or a trading week, depending on the time frame that you are identifying the range, on that period of time where this range is forming. So stay tuned for the second part. More details are going to come, but keep in mind that a range, in order to define a range, you should define it, or you should look for a range in the Asian sessions, or when there are holidays like Thanksgiving, or markets are closed, or bank holidays, when markets have no reason to travel at all. So let's move on with the second part, please.